Ladies and gentlemen, welcome back to the channel. We have a huge week incoming for markets and for Tesla stock. Here in this video, I will break down all of the earnings, the economic data, and the news that has come out in the last 24 hours that you need to know before tomorrow morning. All of this comes as we just had the best May for the S&P since 1990. That's gotta be a good sign in which a lot of people are still very bearish on this market. I think that could be a mistake. But first, before we get into all of this information, hit that like button as well as subscribe to the channel if you have not done so already, and let's get started. So let's start with some of the news here. China's Defense Ministry spokesperson says the US is accustomed to using the Shangri-La dialogue to create disputes, sow discord, and seek selfish interests. And China's Defense Ministry spokesperson says on the South China Sea issue, the United States is the biggest threat to regional peace and stability. Now, Vought, someone within the White House, says the White House has executive tools and that the Trump admin is not taking rescission off the table. He also says that Trump is moving ahead with his agenda promised during the campaign. White House economic advisor Kevin Hassett also spoke on ABC this morning, as well as Scott Bessent. Scott Bessent says, he is the Treasury Secretary, the U.S. will never default on its debt. White House senior advisor Hassett says that Trump expects a call with President of China this week. Bessent says that China is withholding products essential to the industrial supply chain. That is the whole rare earth export restrictions that China has on the US. And I think China is still hesitant to remove those because of the partially semiconductor restrictions we have on China. And US Treasury Secretary Bessent says, I believe Trump will talk to China's President Xi very soon. And I'm sure positive things come out of that conversation. Now, coming this week, we do have some pretty important earnings. Although Nvidia is out the way, all of your big tech is out the way, there's some big ones still. I mean, from a broader kind of macro perspective, from an AI or data perspective as well, or software perspective. So tomorrow, you don't have much. You have Campbell's in the morning, but that's pretty much it. Tuesday in the morning, you have Dollar General, NIO, Ollie's, Ferguson, and some others. Dollar General specifically is interesting because they tend to cater to lower income consumers, just, historically. And if Dollar General has good things to say, if they beat on earnings, that's going to be a really good sign for the consumer, although they've been under pressure for years. I don't expect it to change, but if it does, that could actually be a pretty damn positive macro catalyst for markets. Again, you have NIO, which could specifically be important to some of automakers like Tesla. If they have good or bad earnings, that could definitely move some of those stocks around. Tuesday and after hours, you have CrowdStrike, Hewlett Packard Enterprise, Guidewire, Asana, Mama's Creations, Sportsman's Warehouse, and some others. Wednesday pre-market, Dollar Tree, again, same as Dollar General there. Wednesday and after hours, you have MongoDB, big AI software name, PVH, luxury, clothing, Five Below, Planet, ChargePoint, and some others. Again, Mongo for AI could be big. PVH for clothes, right? Higher income consumer could be big. Five Below's had some issues for a while, but still consumer related name. Thursday pre-market, Sienna, Cracker Barrel, Toro, Victoria's Secret, and Duluth Trading Company. Thursday and after hours, Broadcom, DocuSign, Lululemon, Samsara, and some others. And again, Broadcom, big AI name. DocuSign, big, software / AI name. Lulu, consumer, huge consumer name, higher income consumers. I think that could actually be a big story of this week. How is the consumer doing with Dollar General, PVH, Dollar Tree, Lulu, even Cracker Barrel? Okay, So even though some of these earnings, besides Broadcom and Mongo, they're not, Dollar General maybe, they're not going to move the broader market. Specific sectors will be important to watch from the earnings lineup we have this week. Now, as far as economic data, it's going to be a huge week as well. Starting off on Monday, you have the final numbers for S&P Global Manufacturing PMI coming out for May. That is at 9:45 in the morning. At 10 o'clock in the morning, you have ISM Manufacturing PMIs for May, expecting roughly numbers in line with last month. You also get employment, expecting that to move up a little bit. Construction spending month over month expected at positive 0.3%. New orders expected to go up as well. And manufacturing prices also expected to go up. All of these other components, if they go up, are good, besides manufacturing prices. If prices fall and all of these other components go up, that's a good thing. Fed Logan will speak at 10:15 in the morning. Fed Goolsbee will speak around 1 p.m. And that's pretty much it for tomorrow. On Tuesday, you have JOLTS job openings. This is actually a big one because, again, if you're a business and you're looking to hire 5 employees, you're probably doing better than if you're only looking to hire 1 employee. Okay, so job openings are typically like the first thing to decline with a weakening labor market. I mean, before you fire somebody, you're probably going to stop hiring, right? That's pretty commonsensical. Last month, you had 7.192 million job openings. You're expecting that number to fall to about 7.05 million job openings. Factory orders month over month are expected to fall negative 3.1%. Job quits are expected to be 3.3 million. And the RCM TIPP Economic Optimism Index is expected to rise from 47.9 to 48.3. You will get a speech from Fed Goolsbee at about 1 p.m. and Fed Logan speaks at about 3:30 p.m. And that's your day for Tuesday. On Wednesday, you get the ADP employment change, essentially the private jobs report. You're expecting around 120,000 job ads. Last month was you were at 62,000, so that would actually be a pretty damn good number. Fed Bostic speaks at 8:30 in the morning. The Bank of Canada has their Fed meeting. They're expected to not do anything, not cut rates, not raise, just hold. ISM services PMIs, this is a big one. Expecting things to get better pretty much across the board slightly. For your headline number, expected to go from 51.6 to 52. Business activity expected to rise from 53.7 to 54. Services employment expected to rise from 49 to 50. New orders expected to rise from 52.3 to 52.6. And prices are expected to rise from 65.1 to 65.7. Again, all of these other components can rise, and that's good, as long as prices fall or come in line with expectations. And that, again, comes out at 10 o'clock in the morning on Wednesday. That is going to be data the markets really react to. Now, Challenger job cuts is another interesting one. We spiked to very much recession levels, like almost 300,000 Challenger job cuts over the last couple of months. And you've fallen now. Last month was 105,000. You're expecting this number to rise a little bit to 120,000. These are planned layoffs. Okay, so pretty important data set to look at. In my view, that comes out at 7:30 in the morning on Thursday. You get the balance of trade as well for April, expecting negative 66.6 billion. Again, we're expecting a big drop in imports, which was actually the largest drop you've seen in like ever on a month-over-month basis. So I'm expecting that data's probably fully priced in at this point. Initial jobless claims are expected to fall from last week's 240,000 down to 235,000. So expecting a drop there. Lots of secondary data points as well. Unit labor cost, non-farm productivity quarter over quarter. You get an ECB press conference, couple other things, but that's pretty much it. Also watch out for bond auctions this week. If we do have any, I haven't seen any notable ones here on the calendar, but if we do have any, those could also be big in this environment. Now, on Friday, you get your big data. Non-farm payrolls for May expected at 130,000. Last month was at 177,000. So you are expecting non-farm payrolls to come in on the weak side. Now, typically when we have low expectations, we like come in better. Okay, we normally beat. That would be great news if non-farm payrolls actually come in stronger than we think. Why? Because there's still a good chunk of Wall Street that's concerned about a recession this year. If the labor market continues to hold up, well, that's going to be a good thing, right? You don't want to see the labor market weaken. Okay. Now, the unemployment rate for May is expected at 4.2%. Again, that can go up, it can go down a little bit. As long as it's not moving a lot or fast, I don't think the markets are going to really react too much to it. You get average hourly earnings month over month and year over year, as well as the participation rate, government payrolls, manufacturing payrolls, and non-farm payrolls, private, all of those expected to roughly be in line with some of the numbers you were at last month. So you're actually not expecting a huge change in the non-farm payrolls. And honestly, I think the expectation is probably too low. I think we're probably going to come in higher than 130,000, in my opinion. Now, the percent of stocks trading above their 50-day moving average coming in at 64.63%. So you're still on, I guess, the higher end side of where we have been over the past couple of years, but it definitely not overstretched. There's room to move in either direction here. Okay. And I do think, again, we're kind of heading into this week with negative expectations. So maybe there's room for upside surprises. I know the trade headlines are probably going to dominate what largely happens in markets, and that's unforeseen. But one thing I will tell you is if we do have a call between Trump and the Chinese president, I find that hard to believe that like things go bad during that call. Like, I find it hard to believe that they get on a phone call and there's not progress made, that it just goes bad. That to me seems unlikely. Could happen, right? Who knows? It could happen. But I do see that as a potential positive catalyst this week versus a negative catalyst. Just, again, trying to use a little bit of common sense here. The CNN Fear and Greed Index, nonetheless, coming in at 62. Your previous close on Thursday was at 63. So it is moving down a little bit. It was as high as like the 70s, so it has come down quite a bit. Market momentum, extreme fear. Stock price strength is greed. Stock price breadth, extreme greed. Put and call options, fear. Market volatility is neutral. Safe haven demand in greed. And junk bond demand currently in extreme greed. And if we take a look at the AI Investor Sentiment Survey, I mean, people are bearish. Bearish investors sit at 41.9%, neutral investors at 25.2%, and bullish investors at 32.9%. So, you know, the bears are outpacing the bulls by almost 10%, which last week was the first week there was more bullish investors than bearish investors, and that totally flip-flopped within a week's time. Like, people are quick to get bearish again in this market. And you could see that just represented by the amount of short positions on this market. Shorts are shorting this market, or hedge funds and institutions are adding some pretty big short positions because we've rallied back so fast, so aggressively. And everyone's expecting the ball to drop, the mic to drop, and there to be bad news. At this point, I think we're way past peak fear. I think it's going to be really quite difficult to get a substantial fall in markets from here because we're looking ahead towards 2026, especially in the second half of this year, which we're now officially in. As of today, it's June 1st. Like, we're looking towards 2026, and it's really hard to make a case that 2026 is going to be worse than what we've already experienced in 2025. Like, you need the economy to weaken substantially. You need a real inflation issue at this point, which I don't think we're really going to get either one of those. And I've said that for a while now, but I don't see inflation. I don't see a weakening economy without massive layoffs. And while, tariffs are paused and they're working out deals, it doesn't seem like companies are super quick right now to want to fire people. So until we see mass layoffs, until we see the labor market really start to crack, which this week will be important with the jobs report and Challenger job cuts and the ADP employment report, I just don't see the bear case right now for markets, unless obviously in the short term we get bad trade headlines. Obviously that can move things for a day or two, but systemically I don't see the bear case. And that's why I'm so bullish on markets into the end of this year. I think the S&P is going to rally 20%. I think we're going to get trade deals, and they're going to be a lot better than people think, with an average tariff rate around 10%. Okay. I think we're not going to see inflation. I think that means the Fed can cut rates a lot more than people maybe expect. I don't think we're going to get a weakening in the economy. I think if anything, maybe the economy can accelerate. And I think AI is a big, thing to look at there. AI should start to increase productivity, right? We should start to see AI become a larger focus for investors once again, as it was over the last, couple of years. Okay, clarity on the tax bill. Although the fiscal part of it's not great, I think there is other big positives coming from that. Okay. And again, all of these things are kind of counter to what most on Wall Street are thinking. Most on Wall Street think we're going to have an inflation problem. We're going to have slowing growth, that the fiscal side of the tax bill is worse than, some of like the no tax and tips or no tax and overtime or some of the other positives that come out of that. I just think Wall Street's looking at the negatives here, and they're not looking at the potential positives. And I think they're going to be surprised at the upside. Once this market breaks new all-time highs, I think a chase probably starts into the end of this year. And that's why I think you get all the way up to 700 on the SPY this year. So let me know your thoughts on this down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.